What's going on, guys? It's going to be our summary of markets week 43, and then we're also going to get into the options watch list after it. I'm still coming down off that cold, so I'm still a little sick, so just bear with me with this video, but we should be all right. All right, so starting off with SPY, basically exactly what we talked about last week came true. I told you guys about all those big orders that were coming in on SPY and how there was a ton of volume coming in on the 370s and whatnot. So it looked like it was going to be very bullish. It had all the vaccine news, yada yada. So we opened up the week. I believe the doji was the start of the week. What was Monday? Let's see. Monday was the 23rd. Yeah. So the doji started small gap up, very small, nothing too crazy. It was actually a little shocking because right when this opened, it was right around here. It sold off and kind of put in that bulldog that we talked about in the summary of markets. So you had all that good news, but it kind of faked you out right when it opened. It kind of went for it went for a breakout first, and then it sold off. So it had a really strong sell pressure. But if you guys are in the Discord, you guys might remember we bought that dip pretty heavily. So I think JMA loaded up on that dip. I bought some stuff on that dip as well. We added on to our 370 lottos. We ended up switching into the Q's lottos as well. So we made very good money last week during that pump. So you basically had that sell off, kind of faked people out, put in that double bottom. But because it was putting in that bulldog that we talked about, we were very bullish on that pullback. You stayed above that 1 hour pivot, you popped up, you closed, and then boom, there was the gap up that we were looking for on that Monday open. You didn't get it on Monday. You had a little bit of a fake out, and then you gapped up on Tuesday. And that put us right above the triangle here, the little bullish pennant, and then we kind of went for a breakout for the next few days. But seeing that it was a holiday week, you had Thursday off, Friday half day, you didn't really have a whole lot of time for the market to really push this here. So I'm expecting there to be bullish continuation into this week. I don't really see a reason why we shouldn't have bullish continuation. We do have a little bit of lockdown news going on across the country, little bits here and there. But I feel like a lot of that's already priced in, and the market doesn't really care very much as of right now. Because the vaccine news is coming out, it's kind of counteracting the lockdown news. So I think overall the market is going to hit that all-time high very shortly. If you do zoom out on SPY, where was the actually, sorry, you don't have to zoom out. The all-time high is right here. If you look at this all-time high here, the high is 364.38. We topped out at 364.18 on last week, so 30 cents away from an all-time high. So we should see an all-time high either Monday or Tuesday. So maybe a pullback on Monday and then all-time high on Tuesday. But I really think we see an all-time high this week. So keep an eye on that. I think there is definitely there's enough momentum that should come in when it breaks an all-time high that should send us into the high 360s, or sorry, high 370s. I think we get higher than 370. We go above that call that we were watching. We were looking at that 370 call on December 4th, I believe it was. That should be easily hit. Okay, so keep an eye on that 370 target. I think you can even go above that. But we'll see how it plays out on Monday. You obviously have to play this day by day still. There's so much news coming out. You can't really make a long-term prediction. But I would definitely lean bullish moving forward. Before I move on to gold, I do want to talk about the put to call ratios that we discussed. I think it was 2 weeks ago. I'm going to compare that to the new put to call ratios that I just took today. Okay, so looking at these put to call ratios, this was about the second week of November. Now we're towards the end of November, so 2 weeks later, and look at how these ratios have changed. So the total put to call ratio was 0.81. Now we're at 0.74. So it's going down a little bit, kind of evening out towards the call side. Let's look at the index put to call ratio. It was 1.4. Now it's 2.06. Okay. And if you guys remember back 2 weeks ago, what I told you guys about these index put to call ratios is this is like the smart money. These are the hedge funds, the investors, the big guys, right? These are not the speculative little retail traders, okay? These are like the smart money players, trading the index put to calls, for the most part, okay? Along with the SPX and the volatility indexes, all the index funds are typically traded mainly by the smart money. So when you see a massive put to call ratio on these indexes, it's basically telling you that they are heavily hedging. They're buying a bunch of puts, expecting there to be some kind of correction in the near future, or they are just so long heavy in equities, which you can see that here, that they need to hedge their longs. Okay, so looking back at the equity put to call ratio, it was 0.5, now it's 0.41. So it's getting even worse to the call side, meaning they're getting even more extended to the call side. So these are mainly the speculative traders, like the retail guys, stuff, people like us, and then also the big boys as well. They like buying a lot of equity put to calls, puts or calls, excuse me. Um, but typically, you will see these two ratios kind of giving you an idea of what the overall market is doing, right? Because the equity is like the little guys and a little bit of the big guys, but the index is usually just mainly the big guys. So if this is telling us that the little guys are very extended to the call side, and this is telling us that the big guys are very extended to the put side, that's basically telling us that the overall market is long heavy, and the hedge guys, the hedge funds, the big boys, they are hedging. That's why they're buying so many puts, because they're buying all those puts to hedge their calls on the equities. Okay, so long story short, the small guys and the equity side of the market is extremely long heavy, and the index side of the market is extremely put heavy or short heavy. Okay, so what this would tell me is, this would tell me that the market can definitely go higher, because everyone is very bullish. There's not very many people selling here, but the big smart guys think that there's going to be a correction sometime soon. Okay. So keep an eye on that. Just understand that these ratios are a little early. They could be very extended like this for months before there is any kind of a correction. But with looking at the change in just 2 weeks, looking at how we went from early November to late November, and it's getting worse. It's not getting better. Seeing that, I would say the correction is probably going to happen within the next 1 to 3 months. Okay. Now betting on something like that is very hard, because you don't really understand when it's going to happen. But I would say, looking at all the big events that are happening in the next few months, especially with the new president coming in January, I think the correction will happen within the first quarter of 2021. So just be on the lookout for that. Understand that there are a lot of hedges going on right now. So if you do see a lot of puts coming in, it's not extremely bearish. It looks like it's mainly being used to hedge. Okay, so the market is still definitely bullish right now. Just be a little careful. All right, let's move on. So gold, we talked about last week how without stimulus news, basically gold's just going to keep selling off. And that's basically exactly what happened. I closed my gold position. I took a pretty big loss on my gold position. Sadly, I got in gold when it pumped up here. I forgot all about this pivot. If I saw this pivot, I would have never got in gold, and I would have saved myself a lot of money. But I forgot about this pivot. I got it on the breakout, and then we lost on this big nuke here on the bad news that there wasn't going to be any stimulus. And I went ahead and closed it once you started to kind of break that level there. So this is actually my second biggest loser of the year, is my gold trades. My biggest loser of the year is W Day, which was a winning trade that we let turn into a losing trade. But yeah, so gold, we took a loss on that. I will not be trading gold anytime soon. I will look to trade gold probably closer to when the next president takes office, either Biden or Trump, most likely Biden. But once they take office, once they start getting back into the stimulus talks, then I'll look to get back into gold. But I really need to stop trading commodities right now. I was looking at my portfolio, and my biggest losers of the year are mostly commodities, like oil trades and gold trades, silver, stuff like that. So I really need to step away from commodities. Commodities are a very fundamentally driven market, even more so in a time like now where fundamentals are really driving the entire market. So I'm going to step away from commodities for a little bit. I won't be trading gold or silver, gold, silver, or oil anytime soon, but I will keep covering them in the weekly videos. But for right now, I would say wait off on gold until the next president takes office. All right, moving on to oil, I talked about how it looked really good above 43, moving into 44. Once you started to break those levels, you were breaking basically your 2020 high for the most part. So we are breaking a massive range that we were in since May. We're breaking that entire range right now with that pump. So understand that this is most likely not a fake out because we are breaking a near 6-month range. So as long as the pullback stays above like 42, I think this will definitely continue higher. Okay, so keep an eye on oil. Definitely with Biden taking presidency, if Biden does win and he does take office in January, you should see oil prices go up. Okay, so keep an eye on that. I think any pullback down to 42 would be a bullish pullback, and you should see continuation higher. Okay. Moving on to Bitcoin. Not much happened. We did talk about how you were kind of hitting that fake out level and you were pulling back a little bit. You tried to go for another breakout of the fake out level, but it did not last long. You can see how it faked out once again on that 113, which is your secondary fake out level. So you faked out on that level, failed all the way back down to the previous support. We talked about this in our last week's video, I believe. So you bounced off that previous breakout level, 16.3. You had a couple of buy signals come in on the OTS, which gave you a very near perfect buy on the dip. And then you broke out of that 17.6 level again. You look like you are trying to go higher. So if you are bullish and you're already in some longs, look out for 18.7, 19,000 as your targets. And if you do want to break into this all-time high, which this is not the all-time high, but if you do break this level, you will be putting in an all-time high. So if you break this high here, watch that all-time high push into 20,360. Okay, that would be your breakout target. If you do get back below 17.3, most likely 16.3, and then 16,000 would be your targets. Keep an eye on the momentum here. That failure was pretty strong. It put in the weakest momentum for the bulls ever since back in October. Okay, so that was a pretty big sell-off. Just keep an eye on that. Moving on to Ethereum, basically same story. I told you guys that if it wanted to break out, watch out for that 630 target. You topped out at 625, so you almost hit that target. Very, very close. Put in a top doji, top pivot, and then nuked. So same thing here. Pretty strong momentum to the downside. Pulled back to the OTS trail, just like Bitcoin did. Gave you that buy signal. If you guys are watching the daily trail on Ethereum or Bitcoin, you should have bought the bottom damn near on both of them. So very good buy here. You're already up about 13% since that buy. But same thing here. Kind of a dead cat bounce so far. You don't know if it's a dead cat until you start failing, right? But you are putting in kind of that formation of a dead cat bounce. So this could be a fake out. But if you do get back above 580, look for that 630 again. But if you do not get back above 580, I'd say 530, 518, and maybe even 482 would be your targets. 530 would be pretty easy. 518 would be your main target. And then 482 would be that deep target. Okay, that is the summary of markets. Hopefully you guys enjoyed that. I'm going to switch over now to the options watch list. So there are a lot of things that we were looking at. I'm not going to cover all of these, but we'll look at a few of the ones that we were watching. So net, we were looking at net. Me and J-May were both in bullish trades here, but then it started getting very tight and putting in kind of this rising wedge. It's a damn near textbook rising wedge. So I went ahead and closed my trade for a small profit, and then sadly we were right. It did break out very strongly, but we missed this trade due to that rising wedge. So it kind of faked us out there. Not very likely seeing rising wedges like this breaking out bullishly. You typically only see these if the market is extremely bullish, which right now we are. So we missed that trade, but keep an eye on net. It's a very strong breakout. Any pullback should be a bullish pullback, so watch out for that. Palantir, a lot of our guys were in Palantir. We had a ton of you guys take profit, which was very smart because you did hit your final target at $33. The main targets were around $25 to $30 as well. So anybody who took profit anywhere from 25 to 33, extremely good trade because most of our group has been in Palantir since the 10s to 15s. So extremely good trading on this. Don't be mad if you took profit and it starts to rip next week because the profit was profit, right? 300, 500 plus percent on most of those contracts that we were trading. So definitely a good trade. Don't let it get you if it does pump. But I do think that it could go higher. So keep an eye on it. Your targets are pretty much hit completely, but the pullback is being bought up already. So next week, if you break $30 again, stay above 30. I'd watch 33 again as your target, and maybe even 35 as more of a breakout target. For the daily levels, you're still very extended. This is an extremely bearish candle, kind of like a dark cloud cover candle. Most likely, the daily, if we were looking at just textbook candles, this should pull back. So if you start to break that daily low, kind of around 26, very likely going to pull back towards the low 20s. So watch out for that. 23s down to 20 could be a good dip buy. So keep an eye on that. I'm actually going to put some alerts in here. Let me put some alerts around the low 20s. Keep an eye on that. So any deep pullbacks in the low 20s could be very viable. Was I still watching Peloton? Yeah, I liked Peloton. If you start to climb above 110 on Peloton, I will probably take some trades on this. Maybe shares. Not so much options. Maybe I'll grab some options later on, but I like it above 110. If you do start to hold above 110, kind of back above this range here, I think your easy target would be a gap fill 122. Okay, so if I took a share trade on this, it would look something like this, like 110, stop loss pretty tight, probably around like 103-ish, 103, and then targeting that gap fill kind of around 122. Okay, so risking about 5 to 6 to make 11. All right. So keep an eye on that. I'm definitely watching Peloton. Walmart, I'm not watching that anymore. Baba. I like Baba above 280. You might be able to get to 290. I might take a quick share trade on this. I probably won't touch options because this could be a dead cat bounce. But maybe a share trade from 280 to 290. But it's not really a big thing on my watch list, but I'll put it up here just to keep an eye on it. DraftKings, JMA was trading this, was a very good trade. He bought it, I think, above like 50, and then he sold it at 53. So he took a really good quick in and out options trade on that. I like DraftKings to go higher, but I'm looking for more of a deep pullback, maybe to this trend. So if you pull back to around like 49-ish, I'll probably take that trade into 56. If it doesn't pull back, you probably will get this gap fill very easily. So watch that gap fill. Pinterest, this was one that we were trading last week and the week before. I took profit on this because of this little nasty pullback that it had. So we closed this for a little bit above break even, and then it kind of gave us the move that we were looking for. But look at the volume here. The volume is dead on Pinterest. So I didn't want to stay in this thing and the volume show up to the downside. So I went ahead and closed that for a small profit. But with all the online sales and stuff going on, Pinterest usually does well when a lot of the like eBay, Square, all those other sites. It's not really in the same exact business, but it typically does follow that sector. So keep an eye on Pinterest. With all the Black Friday stuff coming out, all the sales, they're going to be releasing all their sales data pretty soon. If all that sales data comes out to be very strong, Pinterest should continue higher. Okay, so keep an eye on that. Neo, we're always keeping an eye on for any pullbacks. If it pulls back to like 49 or 48, I'll probably buy some shares. If you do start to break higher above 55, I might go for a breakout trade, maybe a diagonal on options, maybe a naked call. But always keep an eye on Neo. Neo is a big money maker. So watch for pullbacks on Neo. Watch for a break of 55. You break 55.50, and you probably will go all-time high. Okay, $60, very easy target. Snapchat, I really like Snapchat here. You put in a nice consolidation, kind of pulled back to your trend, your previous breakout point, and then you bounced right off of it. So Snapchat is a big one on my watch list. Probably number one, honestly, on my watch list next week. If you do start to break above like 47.50, very likely going to get $50 and then maybe even 54 later on. So maybe a week after. But Snapchat is just looking extremely strong. I don't like the weekly candle as much, but depending on how we open on this week, it could kind of invalidate that hanging man. But keep an eye on Snapchat. The short time frames look very bullish. Big C was one that we were trading in Discord. I took, what was it, 9% profit on my shares. A lot of guys jumped in that same trade, but they took it on options. So you guys made a killing on those options. Very, very good trade. You're breaking out. I think I have this drawn out. Yeah, right here. So this thing was breaking out of a very clean textbook falling wedge. Momentum was climbing very rapidly. This was just an easy trade. It was one of my biggest positions. That's why I was happy to take a 9% profit on my shares. I will actually get back in this if the next pullback is bullish. So if we pull back and it's not too deep, probably around like low 70s, mid 70s, I might re-enter this trade because my overall target for this is still very far away, around 105 to around 100. Okay, so I think this thing definitely with all the sales data coming out, I think it will do well. So watch it above 85 or pull back to 70s. Extremely bullish next week. I was looking at data center companies for maybe some share plays, maybe a little bit of longer term stuff. A couple of ETFs that I pulled up were VPN, which is a pretty new one. It's a real estate investment trust and an ETF, so a little mix. Downside about this thing is it has like no volume, so it's extremely hard to get into. But I think this is a good long term hold. So I'm gonna slowly pick up some shares on this, I believe. So keep an eye on that. A couple of other ones that are much more liquid. Wisdom Tree Cloud Computing, WCLD, CTech Global Clean Tech ETF, Cloud CLOU. It's a cloud computing ETF. All of these should do very well into 2021, Q1, Q2, 2021. Cloud computing should do very well. So keep an eye on those. Stuff like AI ETFs as well, like AIQ should do very well. So keep an eye on all this stuff into the first and second quarter of next year. These are more longer term plays, so a little different, but keep an eye on those. They should do very well. AMD, I was looking at AMD. We were looking for a breakout on AMD. I took this trade. We took profit on it. I think we were up like, we bought damn near the bottom on this wick. So we got filled around $84. And then I took profit around like 4 or 5% on my shares. This thing just kept selling off, and I'm just tired of watching it sell off. It keeps pushing higher, selling off. See, pushes higher, sold off, push higher, sold off, push higher, sold off. I'm just tired of it selling off. I don't want to get caught in it when it does finally actually sell off. So we took profit on it. If it gives me a deep pullback, maybe back to like 84, 83, I'll buy it up. But for right now, the nasty sell-offs that it's giving intraday are just not worth holding, especially not for options. If you guys are in options on like AMD, you're getting theta burn like crazy because of how many pullbacks it has. So be careful on that. Out of the current things that I'm holding, I'm obviously still watching all of these. Teladoc, we kept adding on to Teladoc. I really think Teladoc is ready to explode. We are pretty big size in Teladoc. I'm already up like 5 or 7%, somewhere around there. We're doing very well. But as long as it holds this uptrend here, I'm basically predicting a breakout to the upside, gap fill here, and then target this upper resistance kind of around 220, 230. But this is one of my biggest positions right now. I think it actually might be my biggest. So keep an eye on Teladoc. Chegg is another one. We entered Chegg beautifully. I got in Chegg right around here when it started breaking that range. And I didn't add on to it yet, but depending on how it opens on Monday, I might add on to this position to be a runner. This thing could continue to run higher. So Watch that upper gap fill as your final target around 86. We definitely will fill this gap, I think, around 76. So very, very good trade so far if you guys followed this one in the Discord. But any pullback above this range high, I will add on to. So any pullback above like 71, I will happily add on to my shares. Beyond, we are currently shorting Beyond. I think I'm still holding this. I don't remember closing it. We shorted the pivot. I should have actually added on to the pivot when I retested it, but we're still shorting the pivot. If it starts to fail lower, probably about, like fail 140, I might add on to my short. But we are shorting some shares on this, so keep an eye on that. VIX, I started dollar cost averaging into VIX. I think VIX coming into that coronavirus gap fill with SPY and Qs approaching all-time high, it's not a bad hedge. I would not take this as like an actual short heavy trade. I'm using it as a hedge for my portfolio because I am in so many long biased positions. I'm using it as a hedge. So I'm going to dollar cost average into VXX all the way down to probably about like $15. And then I'll put my stop loss probably around like 13. So any dip from here to 15, I will be buying for shares. Now I'm not going to go too heavy. Like I said, it's going to be a hedge, but I do think there is going to be a spike back into the $20 range very soon. So not a bad hedge. Starbucks is another one that I'm still in. I will happily add on to this trade above 99, above 100, I think. This thing can go higher. It's approaching an all-time high. That is your all-time high at 99.72. I think you will break that all-time high. So keep an eye on Starbucks. Very bullish pattern that it's putting in here. Any momentum, any buy pressure that it gets above like 99 is very bullish. Okay. MJ, sadly, I closed 80% of my shares. We bought them down here. It gapped up. I closed 80%, taking that gap as a gift. Like JMA always says, gaps are gifts. Because I took that trade and I instantly received that profit, I thought it was a good time to close, maybe re-add on a pullback. Sadly, after I did that, they talked about a bill that they're trying to pass. I believe it's in the House right now. They are trying to vote on federally legalizing marijuana. They've done this plenty of times in the past, and it never goes anywhere. But that bill being pushed forward again in the House, seeing that the House is Democrat held, Democrats are usually very lenient on marijuana. So the marijuana stocks started flying. Tilray, CGC, ACB, all of them. This is the marijuana ETF, so obviously it did very well. I'm still holding 20% of my shares, but it's 20%, so we didn't make much money on that spike. But depending on how that bill goes, we might add back onto my shares and then hold this for more of a longer term position because we have such a good entry. So we might just average up and then let it run, turn this into a runner, and then we would target probably somewhere around like $20, $18 as a farther out target. Okay. NPTN, this is that dog shit penny stock that I bought a while back because it looked very bullish, and I basically just bought 100 shares and I'm letting it run. Nothing too crazy. I just wanted to have some skin in the game on this chart, so we're still holding that. Rocket, another one of the things that I'm holding. You are putting in a massive inverse head and shoulders. As long as you bounce above like 1950, I think you could still go higher. If you start to break like $20 downward with strong volume, it's going to start to look pretty bearish, and I might have to take some short-term puts to cover my position. But right now, it doesn't look too bad as long as we bounce above that level. And that is pretty much it. Let's quickly look at tech real fast, and then we're going to call it a video. So Apple's still putting in a bulldog here. If you do break above 120, very likely we'll go 125 very quickly. So keep an eye on that. Microsoft also putting in kind of an inverse head and shoulders here. Very jaded one, not too clean. But if you do start to break above like 217, this thing could go higher back into the range high, about 224. Netflix started to look very good. I called out a Netflix lotto that basically instantly paid. I think it was up like 40% within like an hour of me calling it out. 510s would be the lottos that you would take, probably for this Friday's expiration. You might not get to 510, but because it is a low delta position, you could get in and out for a small gain. So keep an eye on those 510 contracts. They could run this week. Amazon looks very good if you do start to climb above like 3250, but it looks like you will probably pull back once you do hit that level. But keep an eye on it. You are putting in a very bilateral triangle, so breakout is coming up pretty soon. Tesla hit most of your targets. I told you guys if you wanted to play a lotto, you could play the 585s or the 575s as your little target zone. Both those lottos paid very, very generously. So if you guys took that trade, very good job. I think it is due for a pullback, though. Putting in a top doji with a kind of a shooting star top does not look very good. So if it gets back below 573, very likely going to come back down to 550-ish, 540-ish. So keep an eye on that. But it is Tesla. I'd be very careful trying to short it. I would not be taking puts. I would just let it play out, wait for the dips, and buy the dips. Okay. All right, guys. Sorry, it's a little bit longer of a video this week, but a lot of information to cover. Hopefully this did help you guys out, and I will see you guys for our live trading session tomorrow. You guys have a good rest of your weekend. Peace out.